LINQTO pre-IPO investing, democratizing access to pre-IPO companies for people who have never had that opportunity. We are very proud to announce today that we're going to bring on Honeybook over the next week or so. They just raised $155 million. That puts them in a plus $1 billion valuation. So if you want pre-IPO access to Honeybook, check out LINQTO. So we're very proud of that accomplishment today. But it's a little bit about LINQTO, but more about the panel that we have today, which is outstanding. I want to say that Moon and I spoke 48 hours ago. She was in Finland and took a flight over and came here for this panel. So pay attention to what she's doing. Tyler, with Antler VC, I've known Antler for a few years now, and they have cohorts all across the globe. So if you don't know about Antler, pay attention to them. They have a very innovative business model in helping founders find partners, creators, and they put them together, and they've had a lot of success, but I'm going to let you talk about that a little bit more.
I'm Kyle Al-Rawi.
Kyle Al-Rawi. I forgot that because of the combination of the first name and the last name.
Yes.
Young man doing phenomenal things on community-driven investment opportunities. So, and if we remember the conversations that we had today, we talked about economic narrative, we talked about cognitive resonance, we talked about show up, knock on the door, open it, take a yes, take a no, whatever the case is. We talked about identifying opportunities for women, especially women who are trying to raise their first fund because of what they do and who they are. Moon is a perfect example of someone who said, look, I'm building a company. I am really good at what I do. I'm leaning into it. I'm showing up at South by Southwest when people from Texas, from Dallas didn't show up. She came all the way from Finland. So lean into it. I know, Tyler, you have a couple of offices in Europe.
Yeah, I think we have 6 and 7 and 8 are on the way towards opening. So,
and also for the Kenyan contingent, I actually visited Tyler's office, Antler VC in Nairobi, Kenya. They're doing phenomenal things over there. They're identifying people who are building the next gen companies and actually killing it. The amount of money that's going into Africa-built companies is phenomenal. You've got offices in Asia.
Yeah,
in
actually,
Europe.
Our Nairobi office to date is the highest TVPI fund we have in the portfolio. So really excited to have a presence in East Africa, and what's going on there is phenomenal. It's really exciting.
And so what I wanted to say today at this panel, this last panel, it's where magic happens. The combination of Tyler, Kyle, and Moon and what they're building is, if we can forge the relationships, the connections today, these companies will all be successful with the support of the folks in this panel and the folks that are here today. So let's make magic happen. What I want, this is 22 South by Southwest, is by 2023, I want companies that they're building on our LINQTO platform because they're killing it. And when they're killing it, you guys get to invest in it. That's the goal. Let's make it happen. I'm going to let you guys start with introductions about yourself, what your value proposition is, how you're supporting companies, and what is it that you're doing differently. Now, the last panel, I wasn't allowed to talk about NFTs, blockchain, cryptocurrency, but today we're at this last panel, it's gloves removed. We can talk about all of that because all of you guys are building next-gen companies, community support, and with founders who are exceptional. So let's kick it off with Moon. Let's go.
Hi, everyone. First of all, thank you, Karim, for all of this time and this opportunity to be here. My name is Moon Jarin. I'm the founder and CEO of a company called Indri. We're building and blockchain technology solution protocols on the third generation of a platform called Hedera Hashgraph. It is world's only carbon negative blockchain platform, and they have the lowest gas fees and 30 to 50 times faster than any of their competitive blockchain currently. And the reason I wanted to build this company was last year I was the chief marketing officer at a fintech impact company. Actually, there was an earlier panel and somebody talked about carbon credits, and that company invested in mangrove forest across Asia, and they were selling millions of dollars worth of carbon credits. In majority of them are in the European markets. And while I was doing that, I almost had an ethical dilemma of a situations like how much this whole thing was top down. Because when I decided to join that company, it was really about creating an environment where I thought we actually did care about the climate. But another thing that I found out was how much I didn't know about the climate. But most importantly, I did not know what is it that I could do as an individual, not as a CMO, not as somebody who get to sit among people like yourself, but just a normal day-to-day person. You know what I'm trying to say? And when I was talking to my friends about carbon credits, they were like, what is that? So last December 30th, just like usual, I sort of make a next year plan, and I felt like something had to change after that COP26 is how do we solve this problem, even though it's a really, really big problem, but we all got a role to play in our society. And, the people who change the world are crazy enough to think that they actually can. And I felt that this can only be solved by a bottom-up approach and not a top-down approach, where we all get to have a say, we all get to make a small decision on a very micro level, day to day. And during the COVID, when the world seemed like it was coming to a standstill, what is the one thing that people did not stop doing? The data shows it's the shopping. The fashion companies, the cosmetics companies, their revenues actually were up if you read Business of Fashion and all of the data. So even though the technology that I'm building, it has a far-fetching, like a really, really large application, but we wanted to narrow it down in the beginning. And I thought in Asia specifically, where almost Asian and African region, 4 billion people today are unbanked. That means you can give them an opportunity to purchase things somewhere. And another thing, since we can talk about NFT, guess where is it that NFT adoptions or NFT display to earn is all crazy? It's also in Asia. So I thought, what if we do a behavioral economics here? What if we pay people to behave better? What if people who has difficulty to bring food, but they want to buy the latest like H&M fashion or Zara fashion or whatever it is, but if you make a better choice, then you get to be rewarded better. And that's how ING was born. I went through different types of, like a lot of iteration, but this is where we really came about, is that e-commerce brands, a lot of brands, brands like Dolce & Gabbana, whose name is here, obviously they're going to be the fast forward, but beyond them, there is right now over e-commerce brand that actually has over $1 million of sales. Statistically, it's about 1 million brands in the world. And if we were to work with them, how do we give them an opportunity not only to play in metaverse, but also to educate them? How do you actually, when I went to shop, I did not know this gentleman here, you are wearing this beautiful like blue shirt, and you go on metaverse and you are trying to buy like this shirt or like this shirt, and do you know that product has a better ESG metrics versus mine, but you are like, I'm going to buy that one, and we will reward you for making these better purchases. So that's what really ING is building right now. I have some fantastic team at this moment, and we're raising funds, and we hope to change the world. Thank you.
Thank you. Thank you. That's awesome. Kyle, go ahead.
Thank you. That's awesome, Moon, and thank you for having me. I'm Kyle Al-Rawi. I'm the co-founder of Hedge. Hedge is a collaborative trading platform where you can make a hedge fund with your friends by pooling money and investing together. So we offer both individual and group investing, as well as social and learning resources. And our mission is to make both public markets and Web3 assets and investing as a whole more accessible, more collaborative, and more inclusive. So my co-founder and I, we met in college. We had been investing since the day we turned 18, actually, but pretty passively. So we didn't come from affluent backgrounds, and our cultures did not necessarily emphasize finance and didn't surround us with a community of people who could kind of show us the ropes to investing. So we stayed pretty passive until college, got there, both went on scholarship to USC, and were fortunate enough to make some great friends who, with whom we were able to learn how to invest. And what we noticed is that it wasn't really about making money. It was more about the community and the relationships that we were able to form there. So as we looked around, I mean, that was a great experience. It's what allowed us to get into investing, but it wasn't necessarily what we were looking to do as a whole. We wanted to grow together. We wanted to grow alongside our community, and we just couldn't. So as we looked around, we saw this was a pretty consistent problem, and we started seeing deeper ones within society. So we've talked a lot today about women investing, and one of the things we observed is that not a single one of our female friends across thousands of women, not a single one was investing, bless you, which wasn't right. So, I mean, I grew up, my parents were divorced, so I grew up largely with a single mom. She was a kindergarten teacher. During some of the most profitable years of the market, she was invested with a company that was losing money for her, which shouldn't have been possible. And when she would try to call, adjust her risk tolerances, ask what was going on, they would write her off because she was a woman making $40,000 a year, and they just didn't care. And so what we were seeing is that there's an entire portion of society, of people in our society, 97 million Americans actually, disproportionately those who are historically underrepresented minorities and women who don't have access to investing and don't have access to the kind of communities that helped my co-founder and myself get into this space in the first place. So we're building a solution to that, and we're looking to take investors from the ground up. These are retail investors. There's no accreditation. Very anti-accreditation, accredited investor laws, and we're looking to bring people out of systemic poverty, bridge wealth inequality, and do that by helping them invest together and grow with their communities.
Well done. Awesome. My name is Norwood. I'm one of the co-founders and now managing director here for Antler in the United States. So Antler, we are a VC fund, but operationally, we're building what we call startup studios around the world. So we fundamentally believe that if we're going to continue to increase the amount of founders that start companies and create services and products that change the world, that we need to update the way that VC works at the very early stages. So we've reached a point where there's a tremendous amount of capital available once you have something that's working and growing. And we fundamentally believe that we need to improve the process of founders getting a company off the ground from scratch. And so essentially our value proposition to founders is we invest in founders pre-pitch deck. We don't look at what you've already built. We don't require you to spend 8 months sitting in your garage financing yourself to have a meeting with us. We look at founders, the problem they want to solve, the background they have. We bring them in. We work with you for 6 weeks. We figure out the idea that we want to launch. We provide really clear and transparent funding. We surround you with resources really from day one. And we think that if we can remove some of the friction from the first 8 to 12 months of getting a company off the ground, a tremendous amount of people can actually become entrepreneurs that have wanted to. And there's just barriers holding them back, whether they be financial barriers or social barriers, whatever that is. So I'll leave you with one quick fact, and this is really fundamental to what we're trying to build. 2021, $651 billion was invested into startups in the United States. It's amazing. It's been celebrated. Everyone's really excited about that. There were roughly, these are really hard stats to collect, but roughly 14,000 founders who received pre-seed or seed funding. So to put that in context, in 2021, there was 35,000 people full-time employed as coal miners in the United States. So despite the amount of money that's being invested in startups, there was more people who were paid full-time to be coal miners than were given the chance to become an entrepreneur. So we fundamentally think that 0.004% of the population is not at all the amount of founders we need receiving support, receiving financing, receiving help to build companies, and we really want to change that number.
Those are great stats, and I mean, I never put coal miners with investing, but here we go. It's like, okay, let's figure that out. Some point. So Tyler, give us a little bit of a snapshot on what you see. What was the number of offices that you have now? You're going on 20?
Yeah, so we have 19 offices fully operating right now. We have 3 that are going to launch in the next 6 months, and another 3 that will launch in the next 12 months. So, and this is all, we started Antler 4 years ago.
So tremendous growth, and let's look at the global environment. When we've talked about various global inputs. We talked about Europe being fashion, the US being CPG, China being tech. Africa is doing a lot of fintech now, especially because they don't have a lot of infrastructure, using more mobile. But give us a global perspective of what you see happening globally in terms of companies that are being funded, being developed, and being successful.
That's a tough question. How much time do we have?
You got to do this in 3 sentences.
All right, three
if
sentences.
you heard Doc Love before, she was here on the panel a couple of days ago. We've done a podcast with her. Listen to her. Synthesize the conversation into 4 sentences.
So, I mean, one of the unique things about Antler is we have really good data, internal data on the companies. Last year, we invested in almost 200 companies across every continent. So a couple things that I think are really interesting. Number one is that a lot of really interesting startups are now sort of global from day one. So we're reaching a point of global parity between markets where it's really clear that really good solutions can scale beyond just the local market that they start in. So that's number one. That's really exciting. I think there's a lot of bears. There's a growing number of bears saying that the stock market is going to crash, the tech market is going to crash. One of the big bull arguments, I think, is as global markets continue to become easier to access for startups, there's actually no upper limit on how large a technology company can become, right? And so we've seen that with private market valuations, and I think that will continue. And I'll just say, one other thing. One thing that we see is that good ideas are coming from all over the world. So I think, I'm American. I've lived overseas for 7 years. I think there's sometimes this fallacy that like really good ideas come from developed markets and they're copycatted and spread out into developing markets. And one of the things we're seeing right now is that actually really good novel ideas that could change things in a market like the United States are coming out of places like Indonesia. They're coming out of places like East Africa. And because those environments have such different constraints and think about things in such a different paradigm, they're creating solutions that are really interesting and applicable to the United States, for example, or Europe, for example. And so it's really exciting, I think, in the next 10 years that we're going to see good ideas from the United States are still going to be copied in developing markets, but we're going to see an equal return. We're going to see really interesting, fascinating, paradigm-shifting ideas come out of Africa, come out of Indonesia, come out of Vietnam, and be applied in the United States and solve problems in really unique ways. So that's what I'll say about like 2 really interesting things that we're seeing right now from a global innovation perspective.
So one of the most important pieces of advice I received from a venture partner, a GP actually at a larger venture firm, and I said, how do you make investment decisions? Who are the founders that you're looking at? And how do you make these decisions? Now, keep in mind, in 2 or 3 years that he was investing, they had 14 IPO exits in a span of less than 5 years. And the takeaway from that was just look at founders who are building projects for 80% of the population rather than 20% of the population. And what we see actually in North America is there are a lot of Ivy League, high caliber graduates from college who are framing their investment on the 20% of the population that they know. My buddies who live in this particular area, who do a particular thing, and they're building solutions for a small percentage of the population, as opposed to folks that are coming out of Asia, India, South America, Latin America, who are building products for 80% of the population. And I think that's important to pay attention to when you're looking at an investment strategy, right? That's really, really key to looking at what you do. And then we go to someone like Moon who's coming and saying, hey, if we look at what is the infrastructure that we're building, if we look at, interestingly enough, we've talked today about Web 3.0, we've talked about blockchain, we've talked about NFTs, we've talked about uh, the rails that they're built on, right? And all of those ideas have issues. But what happens if you can remove the friction points globally of all of those individual aspects of getting into NFT or Web 3.0, which is what you're building, trying to find the best solution to connect on an enterprise level things that the community are building, things that the community are building for the community. So talk to us a little bit more about that and how you're doing that.
That's a great question. So one of the things, because our technology and our token is building on the proof of stake governance, and a lot of people ask me these questions. The very first question they ask, do you have a DAO? And, you know, even though I've been in this crypto and blockchain space for almost 5 years, and I was the vice president of operations and marketing for another really successful cryptocurrency. And I will tell you this, even we haven't found out how to do a DAO properly. Or people, they call themselves a DAO. Exactly how does it actually really work? So we had to figure out a way, how do you build a community, but then you are operating at the enterprise level. So I actually come from corporate background, so I still, and I'm an engineer, so I still look at things from very much of a systematical point of view, that things needs to work first, things needs to make sense first, because if there is no system, then you are, and if you're not focusing on the process itself, then you may have a really great idea or you might be doing a really great thing, but ultimately what you talked about, when you're building things for 80% of the people, it has to be something that has a real world adoption. And when you're trying to make things for a real world adoption, that it is creating value for yourself, then there has to be a community aspect. Now, coming back to in blockchain space, how is it that people are making community these days? They're focusing a lot on Telegram. They're focusing a lot on Discord and so on. So by already trying to build communities on there, I have seen some flaws, like what can be there, because it is very difficult, to be honest, to figure out who is actually real and who is actually fake. There is just way too many fake accounts there. But if we wanted to get the real data, as Tyler has mentioned, and for any brands or any company to be successful, data is almost your best friend. How do you measure that? So what we try to figure it out is, you know, as the brands that we're partnering with and the brands that we're actually onboarding, is we are getting the analytics. Actually, we want to get the analytics directly from them. Not only that, we are creating a patented technology. It's a ESG tracing API with machine learning and AI, which actually tracks your behavior and your spending, and then that's how you actually get rewarded. So that is how we are really tracking this community that is being developed, right? And our partnership with the brands also helps us to get the direct sale amount, like how many of these sales that they actually have made through our API system and what so on.
I want you to repeat that number you mentioned earlier. So if we take Dolce, we take out all these companies that everybody recognizes that have huge transaction values. But if we look at what the community is developing in terms of brands and products, what was that you mentioned? You mentioned a million companies.
A million companies whose sales amount yearly is over $1,000. 1 million, like 1 million e-commerce company out there in today's world, and like that's 1,000 and above.
So keeping that in mind, if you look at companies like Etsy, who started talking to an opportunity of a back-end marketplace or efficiencies in a marketplace, they grew into an IPO several billion-dollar company valuation. Let's look and let's think about all of these creators who are creating companies who are micro-influencers in particular environments that they are valuable in, and let's look at who's playing in that market and how do we create an infrastructure using web, ESG credits, carbon credits, to ensure that your consumers are making choices based on the future, right?
May I make a comment there? Actually, it's not a credit because I want to stay away from ESG and carbon credits altogether. It's more like ESG metrics, and we're working with companies who already has that data and who doesn't have that data. We have partners who's going to help build them. And for ESG, even though its environmental, social, and the governance aspect of it. We can even put together their APIs that exist on Web 2.0, but it doesn't exist on Web 3.0 yet. Every single purchase that you're making currently, how do you put the carbon emission data on top of that? But with machine learning technology, it is possible to do so. So coming back to that, why is that important, the Dolce & Gabbanas and everything? Obviously, they have all this money. They're always hiring these chief metaverse officers and stuff like that. They're going to be leading into this, like, they can be here. But when they're doing it, other companies are like, well, we have to get there, but we don't know how to get there. But do you know where the power of that number lies? Is all of that 1 million website that's out there. What you're doing, Kyle, the power that lies in this 80% of the people who are underrepresented, they don't know people who make only $30,000 a year or even $20,000 how to do investment. That's what it's really going to be coming from. And this whole point of decentralizations and stuff like that, the reason this movement really came about is there's a group of people in the world who just say that, I don't know how to play the system. Or if I don't go to Ivy League universities, then I cannot get into a private equity company. Then I'm never gonna have that $10 million penthouse in Manhattan. And I'm sick of that. I want a different change of life. So how do I get there? So if you really look at the sentiment, everything in life, business for me is personal. It is sentiment. People, no matter what they say, that why they're doing, we're trying to change the world, but there is a much deeper emotion and sentiment behind that. It is a reflection of deeply who we are as a human being. And we want to connect with people who also feel like that, Like all of us who are sitting here, I'm just going to make an assumption, at some point in our life, we've felt helpless that we couldn't get something or we couldn't do something because of either whatever family we're born in or whatever school we went to or however we look or something like that. But I think this generation of entrepreneurs who are here, and Tyler, the type of companies that you're funding, what you're really trying to do is creating a level playing field. Like we're trying to strive to be that equal society where we can break down those barriers. And that's what Andrew is trying to do, is we want to break down the barriers for like a small startup. Like we're only selling $1,000 per year, but we want to tell them that it is not in your disadvantage that you only sell $1,000, but you can still play with the Dolce & Gabbanas and you can still communicate your essential core values of your ESGs.
Wonderful. So we go to Kyle, which is, so when we look at when we created our platform 2 years ago, it was all about that deprivatize access. Democratize access to investments, separate Wall Street from Main Street, allow who can invest, allow them to invest. If you look at all the folks that are invested in the public markets today, they've lost 30 to 70% of their valuation based on blind investment strategies to a large extent. And so when I'm going to pick up on Tyler's point, but before I do that, about the valuation of public companies and how they're developing, I want to go to Kyle, because Kyle's also now, we only deal with accredited investors, so that's one level down, but Kyle's going even deeper into an environment where there are investors. I mean, who's to say who should be accredited? Who is to say this? If you look at the SEC and FINRA regulations today, you need a $200,000 if you're filing singly. You need $1 million worth of assets. That's before you become accredited investors in the U.S. Who's to say that that guy's smarter than any of us here who are not accredited? We need. Would you say that the public education system or the education system is broken? We're all here learning, making educated guesses, and we do that on our learning. So what you're doing is pretty amazing. It's like you're going even one layer deeper and saying, hey guys, we're building your platform for you to make a choice. If you're going to make a choice, do your research and get going. So tell us why you are doing this.
So at the core of what we're trying to build here with Hedge, it's about helping communities grow together. And I like what you said about what's to say an accredited investor is any more educated than anyone else sitting outside here. And until about August of last year, I believe it was, when they allowed people who had taken the Series 65 test and passed that to become accredited investors, it really was just about net worth. So they're saying that education is equivalent with the amount of money in your bank account. if we look at, I mean, some of the largest hedge funds in the country, they hire exclusively from Harvard, from Stanford, MIT, Yale. Who's to say that someone coming out of those colleges is any better educated to be an investor than one of us? I mean, there's a reason that most hedge funds don't beat the markets, and it's that individually, it's very, very hard to beat them. I mean, you're probably better off investing in an index, leaving your money in there. Problem is that when you're coming from the bottom and trying to get to the top, 12% a year doesn't mean much when you only have $100 in your bank account. I mean, at the rate of inflation, you're barely beating it. It was 7.9% in the last CPI. So if we want to change things, we need to, one, start educating individual investors, and two, stop making them individuals. So I think institutional finance has been very intentional about subjugating retail traders to their individual accounts, not wanting them to trade together. And there's a reason that HNWIs in this country, they all invest in family offices, in hedge funds, in group investments. They don't invest as self-directed retail traders in their individual accounts. Not to say that that's not a good strategy, but they're not doing it, right? They're going towards managed investments, which is something that's not accessible to the general population. And even if it is, it doesn't give you the returns that you need to really make a difference. So community activation, community growth is a great way to pool the alpha together. I mean, because at the end of the day, we all know something different that we can use together to beat the markets. It is possible. 80% of investment clubs outperform the subset of their members. So what we're looking at here is how do we help communities, first of all, find each other. I mean, like I said, this is a very non-inclusive investor culture at the moment. 85% white men. Asset managers are 99.9% white men, which is a horrible statistic. So if we want to break that down, we have to get rid of the assumption that you're only going to be a good investor if you come out of Harvard. You're only going to be a good investor if you come out of Yale. We need to allow communities to meet. We need to facilitate those interactions, get everyone into investing at early stages, and then train them and build platforms that will grow with them. So that's what we're doing at Hedge. We provide communities that are just beyond just a social feed. So, I mean, we've looked at companies like Public, Common Stock, Irish StockTwits. Most companies out there are lumping everyone together in one big community, or they're running in backroom Discord channels. And it's not something that allows context switching or allows people to congregate with others with similar backgrounds, similar interests. So we need to scale down. We need to help communities become subsets of a larger community on a platform and provide other mediums for people to interact. So that's what we're doing at Hedge. We're providing the social features, the learning features, and then facilitating the ability for these people to start investing together without having to be accredited investors, without having to incorporate an LLC or go through any of that process. It's just kind of click and submit, and we're not focused on making them ape into things, but rather building them up as investors, teaching them and helping them make smart investments.
Oh, so I have to worry about Kyle because then he's going to compete and take over from LINQTO in the next year. So that's a worrying fact. But Tyler, when you look at and what's really interesting about what Antler does is they have so much information about who the founders are, what the application process is, what the pedigree of the entrepreneurs are. And I want you to take yourself out of the North American market for a bit, if you can, because this is where we are. We're all familiar with that. Take us to your global environments. Talk to us about what that successful entrepreneur that you fund looks like.
Yeah, it's a great question. So I think the core of our thesis is the only way you can really invest in founders and be founder first and founder friendly is if you're willing to spend time getting to know the person, right? Like if you say that you're a VC who invests in founders first and you make that decision based on a pitch deck, by default, the only way you can actually do that is by using where they went to school or where they worked previously to make a decision about their character, right? And so you're baking in all of these existing biases is the right word, right? You're baking that right in. So if you say, hey, we're founder first, we invest in great founders, and you look at a pitch deck with a slide with people's face on it, that's great. What you really mean is like, we invest in founders who got into Stanford. That's cool, right? Like there's nothing wrong with that strategy, but like be upfront about what you actually mean. And so for us, when we say we invest in founders first, what we actually mean is the intrinsics. We don't care where you went to school. I went to Appalachian State, right? None of you probably even know where that is unless you're a football fan. Yeah. So, yeah. And so I think truly, like, from a structural perspective, you have to look at deals differently if you really are going to invest founder first before there is a pitch deck, before there is any traction. And that's why we run the studio model. That's why we bring founders in. We get on the whiteboard with them. We spend six weeks with them actually assessing. So I'm going to get to your point. There's a couple things that we're looking for. And I'll be completely honest about what these things are and why they're important. First of all, building a startup is no small feat. I think that the zeitgeist about startups is like everybody should do it. It's a great way to get rich. It's not a great way to get rich. Everybody shouldn't do it. It's can I say bad words? Are we streaming? It's a really fucking hard job. And if you're going to do it, I think you need to be fully committed to what that pathway is going to look like, or else you could easily waste 3 or 4 years of your life. If you're not fully committed, don't do it at all. Because 3 or 4 years dabbling in starting a company is a great way to waste a bunch of your own time and a bunch of your own money. And so there's a couple things that we think are really important and that we assess throughout the 6 weeks. So number one is grit and tenacity. You have to be willing and able to walk through walls every single day, all day long, for a really long time. And grit and tenacity, I think, is both in the immediate, which is I can wake up every day, I can motivate myself to go out and solve all of these really stressful, complex problems that I have to solve. And I'm willing to do it for the next 10 years, at least, right? So being able to say, I'm going to do it today and I'm going to do it tomorrow for the next 10 years. And that's how long it's going to take me to build what I want to build. Number two is you have to be a strong communicator. I don't think there's any one good way to be a strong communicator, but really good founders have to have really strong personal impact. You have to be a center of gravity. You have to be able to sell a vision that attracts talent and investors and customers and media support and all of those things. And that can look a lot different. My communication style is different than a lot of the founders we back communication style. But the reality is they've figured out a way to sell the vision and to inspire people around what they're individually doing. And then the last thing we look for is you have to be very biased towards building. Right? You like at the end of the day, a startup is really building things every day for a really, really long time. And so when I talk about the grit and tenacity, what I mean is you're willing to get up every single day and build stuff and build stuff and build stuff and build stuff. There is, in the current market environment we're in right now, everybody knows, there's so much VC money flying around. Everybody should be a founder, blah, blah, blah. It is a really, really easy time to have a great idea and go out and raise a bunch of money and say that you're a successful founder because you raised a $10 million seed round, et cetera, et cetera. The same amount of people who are willing to actually do the work are out there. And as a VC, those people are hard to find. And I think that that's the last thing that we really look for is, do you want to talk about what the future can look like, or do you actually want to build it? Because the future is indeterminate. I do not believe that there's some inevitable future out there that some people are really good at predicting and aligning themselves towards. I believe that people who wake up every day and say, this is what I want the future to look like, and are willing to put in the time and effort to make that happen, it will happen, right? You just have to be willing to dedicate a pretty significant portion of your life to bringing that to life. And so Antler is a really interesting place because we really are founder first. We do want to back founders earlier than any other VC is backing them. We want to give anyone who's willing to put those things in the chance to become an entrepreneur. But it's really interesting because I don't want to conflate that message to, I'll give anyone money who says they want to be a founder, because I won't, right? I'll give anyone money who can show me that they have those three qualities, and I will back them all the way through their Series C. Right? I will continue to write checks and continue to support their vision and be a champion for them. But the founders have to bring their end of the bargain to the table. And so, yeah, I guess I'll stop there. I could continue rambling about this. I
have a follow-up question. I know, Kyle, you want to say something, but I'll give you a perfect example. I mean, look at our company, right? So I invested in LINQTO end of 2016. We were building a product. We were successful, but we knew by 2018 it was never going to scale. It wasn't going to scale to where we wanted to be, so we pivoted, product market fit, and I'd like to say that you have to be in the right time, at the right place, in the right environment, with the right situation, but it took us 7 years to get there, right? And that's a number to remember. It takes time to be in the right place, the right time, with the right product. And you have to be able to see it through, be able to sustain that enthusiasm, that growth, that vision, that mission. When we were relaunching our company in 2019, there were 4 of us, and we were writing checks to pay for marketing, to pay for engineers out of our own pockets. 2 years later, we're tracking over $25 million worth of revenue right away to the bottom line. We've done $100 million plus of investments in companies in 2 years. But it took us 7 years to get there. So stick to it. You have to be strong. You have to be dedicated. You have to have a vision, and you have to have a team that's ready to back you all the way through.
Yeah, and my partner Jeff is sitting right there. We were talking before he came over here, and one of the things we tell founders that we work with all the time is there's 2 perspectives you have to hold in your head at all times, which is, what are you building 10 years out? What's your 10-year vision? What are you doing right now? What are you doing today? Any perspective in the middle of those 2 things is sort of a waste for founders. So thinking in the 1-year perspective, or the 3-year, or the 5-year, it's, we want to send humans to Mars. Great, that's your 10-year vision. Inspire, get on stage, tell people that's where we're heading or whatever, and then tell me what we're doing right now, which is like fixing this engine so that our next launch works. And so to your point about the grit and persistence and being able to think on that scale, where am I trying to get the world in 10 years, and what am I doing right now today? And being able to hold those 2 sometimes competing perspectives in your head as a founder and kind of switch, who am I talking to? Am I talking to an investor? Should I be selling my 10-year vision, or am I talking to my team and trying to figure out, like, guys, what are we doing in the next 8 hours to fix this problem?
Absolutely correct. I know you're itching to say something. Go ahead.
Yes. I mean, those are both great responses. And if I may add to it, I think one of the important things, because the founder lifestyle is so romanticized, and I think that people often don't focus on what it really takes. I mean, we all know it's ridiculous. So, I mean, to give some context, we heard probably somewhere between 100 and 150 no's before we heard a yes. Because what we're doing, I mean, just because of regulatory requirements, you can't put a product in market without raising money. So it was at times choosing between paying our employees and eating. And I mean, we dropped out of school, we put everything on the line for it. And I think that that's not something that's often looked at until a company is already successful. So, I mean, you have to be willing to put in 20, 22-hour days sometimes, and to keep doing that for a long time, and to hear all of the no's. And for us, it was, I mean, my co-founder and I were really young, Gen Z. I'm 21 years old right now, and thank you. And I mean, we heard a lot of no's because it was really hard for people to trust that we were serious about what we were doing and that we had the skills. And we had, I mean, it was absolute determination and blood, sweat, and tears, and no joke. I mean, you have to put everything on the line and believe in what you're doing, and really think that the world just needs your vision. So for us, there was just no way in hell that I was gonna let someone else's mom have the same experience that I did, or that I was going to talk to my kid in 20 years and have a son tell me that none of his female friends are investing. It just doesn't make any sense. So when you see the world as it is, my perspective is that I've never believed in changing things from the inside. I'm a much bigger fan of taking a sledgehammer to the existing model and doing it yourself. So I think that you can only change things so much from inside the system, and at some point you just got to break it all down and rebuild it. So that it's not always pretty, but it is worth it, and I mean we've come a long way, but it does take grit, determination, and yeah, a lot more.
Well, and I think you brought up a good point. Like, under grit and determination is that temperament, right? So if you're going to build anything meaningful, you are going to deal with regulators. You are going to run into existing rules that have to change. You are going to have really tough conversations about the things that are happening secondary or tertiary to the service that you're building, et cetera. And so under that grit and tenacity too, I think you have to care so much about what you're building that you're willing to like fight through those things and say like, hey, if you're successful, you're going to have a really tough conversation with the SEC one day, right? Like, inevitably, you're going to have to talk to those people and to have that temperament to say, like, this is why I'm doing it. I want to have those conversations. I want to tell them how we can update the infrastructure to make it better.
And
No, I got to say a couple of things. It's like the SEC and FINRA, please. You know, they're talking about changing the requirements now. It was 10x. They want to do a 10x. So if you don't have $2 million worth of income or $10 million worth of assets, they want to change those rules. That's ridiculous. But I won't go in that because it's live streaming and I might get into trouble here. But
Yeah, we love you, SEC.
yeah, what you guys are
You're the
talking
best.
about, let's do a plug for Grit Daily. It needs to happen every day. Grit Daily. Every day you need to work on it, right? It's the big picture that's important. But like Tyler said, what is it that you're doing today, now, in the next hour, that's going to make a difference to your business? That's what's important. What are you doing now to make a difference to your business?
I'm here.
There you go. You're here. Congratulations.
I'm here. I flew all the way from Finland, and all the crazy time zone difference. I'm working with teams in Poland, in Switzerland, and Singapore, and here and in between everywhere. I'm dealing with finding developers and figuring it out when they tell me that they know how to build something, and after 2 weeks you figure out they don't really know how to build something, that they just wasted 2 weeks of your time. I'm dealing with like the challenges that you just talked about, like every doors that you walk through. Like I think one of my friend was standing there. He told me earlier. I know a gentleman who just talked about an idea and they just raised literally no product, $21 million from their seed. But when I talk to investors, they're like, oh, I need this, I need this, I need this, I need that. But you still have to smile and you still have to have a purpose. And because I have my purpose, I wake up every morning and I know exactly why I'm doing this, and I have that passion and I will keep going. And I'm talking to all of you because I think creation, business, these are purpose and these are energy. And holding this energy among doing these millions of things every day, it is the tough job, which is what you said is grit. And I think I have a proven track record of having that. So I'm just enjoying that ride.
So, thank you very much for that. Grit work every day. I want to ask you maybe one or two final questions, Tyler. When you're looking at, I remember when I was in Kenya and your office in Nairobi, and we were looking at some of the companies that were being funded and developed there. That was pre-pandemic. And so I want to get your impression of what changes have you seen pre-pandemic, during pandemic, and what is your thought about what's happening in the next 2 years? Keep it to 2 years. I don't want 5 years. What are the seismic changes that you will see happen over the next 2 years? So pre-pandemic, what were you funding? During pandemic, how did you see people coping? And in the next 2 years, what do you see being built that are going to be successful?
Yeah. Also, you've talked about our Africa office. Quick shout out. Not only do we have a fund in Nairobi, it's run by 3 female GPs. Our entire GP team in Nairobi are females. Yeah, so, and they're awesome. They're the best and they're doing great stuff. Oh man, this is a really tough question. Look, so I'm not gonna avoid your question. So, okay, my answer to your question is pre-pandemic, during the pandemic, post-pandemic, the world is going to change a lot less than people think. So I don't actually believe that there was this monumental shift in the direction of the world from the pandemic. And the reason why, so there are a lot of trends, right? Future of work is a big trend now, and the metaverse is a big trend now, and et cetera. There's all these trends. The reality is COVID, there's a war in the middle of Europe. There are a lot of adverse things that go on in the world. And it's really easy to get sucked into this worldview that those are going to fundamentally shift the direction everyone's trying to get. But my worldview is everybody is really ultimately looking for the same things. And those same things don't really change. They didn't change during COVID. They're not changing now. They didn't change before COVID. The way that people get them and the way that people think about them do shift a little bit. But ultimately, I think everybody is looking for the same things. And one thing that I tell our founders is don't chase trends, right? Don't build a metaverse company because metaverse is super hot right now. Don't build a Web3 company because you hear about all this money that's being raised in Web3. Build things that satisfy the basic, Moon, you talked about, like the basic underlying needs that people have. And I think about coming up with ideas in two ways. Number one is something was built or something happened that created a new problem for people that we had never had before. Social media is a great example. Before social media, we didn't really know what giving every single person in our whole society a platform to say whatever they want looked like. And now we realize that, hey, we did that. We democratized media, and now there's a bunch of new problems for us to solve, right? So as a founder, say, well, go solve those problems. Go figure out, how do we rein in social media, right? How do we continue to protect free speech, but also solve some of the tricky things that are going on in these platforms? New problem created by an old solution. We could have never seen that was going to happen. And the second thing is take new technology and apply it to solve our old problems in better ways. But don't chase trends. And so the answer to your question is continue to build things that people want. Continue to find ways to make the things that we want cheaper, easier to access for more people who haven't had access to it, etc. And so my final plug, hopefully the pandemic brought to light the fact that we do not need another startup that's going to get grocery deliveries in New York City from 8 minutes to 7 minutes, right? We do not need these marginal improvements on services for coastal urban populations. Pretty good. Living in New York City is pretty good. There's a lot of services, etc. There is not only an entire middle of the country, but there is a whole rest of the world that want the things that people in New York and people in California have access to. Very similar to what you're doing, right? So, and what Moon brought up, right, is thinking about what can I build that's going to be wanted by 80% of the population, not an incremental improvement for 20% of the population, not really thinking about how it applies to everybody else.
So before you jump in, then I have a question for you, but I want to give you a very simple example of what Tyler was talking about when we were in Nairobi looking at the businesses that we're developing. So at that time, there was this huge infrastructure play for influencers and micro brands and brand influencer platforms. And so, in our mind, we're thinking, okay, influencer, brand, platform, how difficult can this be? Well, it turns out that it's much more difficult than you think, because the influencer that's talking to a particular region or even localize that to a particular town, that message is completely different from the guy in the next country, region, town, or language bias. One thing in one market does not mean the same thing in another market. So when you talk about a product that's improving what you do, it's really important to pay attention to what the market is. So that was a great example of being able to say, yes, you're an influencer marketplace and your platform, but how are you tackling the millions of people in the town next to you, the city next to you, or the country next to you? And this is especially relevant in Asia, South America, Latin America, and Africa. But let's talk, Kyle. I know you want to say something, but I do have a question for you. When you are looking at the motivating factors of the folks and the investors who are supporting you, help us understand who they are.
The people who've invested in our company?
Yeah.
So we, like I said, we got about 100, maybe 150 no's before we got a yes. And our first yes was with a few partnerships. I'll shout out Alpaca Markets for partnering with us. We've also partnered with NASDAQ and Plaid. But along the journey, the first investor who backed us was On Deck. So their ODX accelerator, we're in the first cohort of that. And when we were looking at building out our cap table, we were looking at a few things. One of them was we didn't exactly get in this business to make rich people richer. So involving as much of the community as possible, involving creators, getting alternative sources of funding was a big thing for us. So we do have VCs on our cap table, but these are all VCs that we were extremely selective. We turned down a lot of checks, and we turned down checks from people who wanted us to go in directions with our company that we didn't want to go in. So we had offers for instance, we had one offer for $1 million from a VC who wanted us to exclusively market to Wall Street Bets. And not to say that those people shouldn't be allowed on our platform because we're for everybody, but that's not what we set out to do. We set out to make a platform that was for everybody, and that requires community and authenticity and being able to build those in different contexts for different people. So the other main source of funding that we got was from creators. So we have creators on our cap table that have cumulative distribution of about 100 million followers, and these are a bunch of people. And I'll shout out the first one to invest in us was Liquidity, if you guys are familiar with him. And we have a very diverse group of creators who have backed us. And yeah, I mean, we just really focused on, let's get people who care about making the investing space more inclusive, more collaborative, who believe in our vision, and who are willing to back Gen Z founders who are trying to create real change. So the motivation for people who are backing us, because I mean, so we're looking to launch at the end of the month, and it's been a very long process, but when they were backing us, they were really looking at my co-founder and I. My co-founder's name is Yash Khandawal, so shout out him.
Shout out.
Yeah, shout out Yash. But the two of us, I mean, we were 21-year-old kids who had just recently got out of college, and I mean, we were young. So these investors were people who really believed in our mission. And I mean, I wanted to touch on something that you said. You said that the pandemic hasn't changed a ton of the world and people's base motivations are all the same. And I think I agree for the most part. But one thing that the pandemic, I think, did bring out was something that's been evolving over the last, so over the last 20 years, we've seen the evolution of consumer social change radically from MySpace to Instagram, Reddit, Facebook, now with TikTok. And TikTok was one of the things that was really born. And I think it was bringing to fruition, or to at least the next stage of community-driven authenticity and the creator economy. And the creator economy has become, of course, kind of a buzzword. We have a lot of Web3 startups and new startups saying that they're creator economy focused, but I think what it really does drive home is this idea that you can come from anywhere and can be successful, which is, I mean, kind of a core idea of what we're building at Hedge. And so, a little all over the map here. It's just generally how I do things. But yeah, I mean, community authenticity, and all of the investors who've backed us believed in that, and that's what we are.
That's great. Moon, live streaming, what do you want to say to everybody who's looking out at you today? What do you want? What's your ask?
Believe in yourself and get up and do what you want to do today.
Great. Wonderful. Kyle?
I think the only thing I would want to say to you is anyone can be an investor, anyone can be successful. Grow with your community and don't be afraid to get after it. So, I mean, I'm 21 years old. We've been incredibly blessed, but I mean, you can do it. And for me, it was all about just taking a leap. So I guess what I'm trying to say is jump.
Do I get to say what I want to say?
Yes, of course. You get to say what you want to say within no bounds.
Very similar, but I think it's time. Like, my main message right now and my main theme in my life and with our team's life is, like, it's time to go back to work, right? It was really, it was a cool experiment for all of us to sit at home in our pajamas and work on the internet. But there's a lot of really big, really complex problems that need to be solved in the real world. And it's time for all of us to start waking up in the morning early and sort of setting out with the intention of, like, I'm going to put in the hard work. I'm going to change the world. I'm going to do the work that it takes. And there's some ways to get rich fast, but there's no way to change the world fast. And so my sort of theme of, like, it's time to get back to work is, like, it's time to start thinking in 10 to 15 year timescales, right? And you know, that's why I love being on stages like this. Is like, you guys are clearly thinking about this, like, I'm gonna do this for the next 10 years, and we need less people who are like, I'm gonna get rich in the next 1 year and retire. And, like, that's cool, but it's very selfish, right? Society doesn't benefit from you getting rich in the next year. Society does benefit from you waking up every single day for the next 10 years and building.
Well, there we have it, guys. Big round of applause. Tyler, Kyle, Moon. Show them your love and support. Thank you for Grit Daily House and everyone that's been here. Thank you all. Have fun. It's the end of the day, almost. All right, bye.